Welcome to Trading Lounge and the European indices. We look at the Dax, the FTSE and the AEX, and most of these markets are all in impulse waves to the downside, so they're very easy to track, well easier than corrections. And let's take a look at the Dax just on the hourly chart here. So in the sort of squashed up bigger picture here, we're looking at a 5-wave structure to the downside, and within this here we're looking at this 5-wave structure, impulse wave within here's wave 1, ABC for wave 2. We're looking at this here as wave 1 here and wave 2 here for two reasons, rather than having this as a blue wave 3 here and blue wave 4 and blue wave 5. Is first of all is that the length from this top here down to this low here, the distance of that is actually shorter than the wave 1 here. So wave 3 can't be the shortest, so it would have to be wave 1 and wave 2 here. And secondly, wave 3 is normally we see that wave 3 is the most powerful point in the wave structure. So from wave 2 here to wave 3 here, this will be the longest and the strongest within the section. So if that's the case here, then wave 1 here, blue wave 1 and blue wave 5 here will be roughly the same in length. And in this structure here, we've got the third of the third here, the third wave in blue and the third wave in green coming into play here. So it normally moves the swiftest, a little bit like this one in here. So it would have wave 1 and 2 and then wave 3. And the same over here as well, wave 1 and wave 2 and wave 3 being quite quick. Well, wave 5 was quick there as well. So, but generally speaking, wave 3 is the quickest. So we can look at wave 4 coming into play here. We're at 13,000 here, which is a major level, but it's a big number as well. So when you get big numbers and Elliott Wave working together, it can skew the wave count a little bit. So you've got to be a little bit mindful of that and take a slightly different perspective when you're working around whole numbers sometimes. But from the top of wave 2 here to the low of wave 3 here, if that's the case, if that's not the low, there'll just be one more small one in here. But the 38.2% retracement level comes in here, so you can look at that in a more refined way at 30,073. But that said as well, you also need to be mindful of the fourth wave of one lesser degree, which will be in here at 13,050. So this is the space that we will look at in here as the retracement level in here for wave 4. So it gives you another shorting opportunity here. So what we can do here as well, let me just clean this up a little bit. First of all, we can move our stop down now. We could move it down to, let's just keep it out of the way for the time being, shall we? And we could also look to move in again as well. It's a little bit tricky here because this particular trade here that we take here, if we took another trade, let's just, because we're confident in the wave structure, normally it would go under here as a retested here, but let's just go in around this level here. And secondly, for this particular trade here, we would need to take some profit. So because we're going to get another bounce back to the 13,000 here, which will give us another opportunity. So let's just call this take profit. We want to leave some skin in the game. So if I just put 50% here, what that will actually mean will mean we'll have that trade in and this trade in here. So it will just be exiting this trade here. So this trade here will be exiting at this point here. We'll refine that when we get to there. And then we'll also, you can take more of course, but we'll also look to sell over here again as well on this movement here. So I'll just put it there as well. So that's our little strategy for that, and we can refine that as it moves along a little bit. If you don't overtrade, then you don't have to sweat it out too much, and you can make it more enjoyable. If you overtrade, you'll just end up losing your money and you get all stressed out as well. So we're also working on, in the accounting program as well, I haven't quite finished it, but we've got a new money management system that we're putting in. We've done the Forex and the indices money management system method, and I still need to do the stock one as well, but it will be a vast improvement on pretty much any money management that you're working on, because most money managements really work on your total balance within the account, and this particular one that we're working on works on the numbers of the profit and the loss. Yeah, anyway, we'll get to that. It's not quite, I've got most of it in there, but I haven't got the explanations in there yet, and a few other things, but just takes a little bit of time. Alrighty, moving on from here. So we'll look at the Netherlands. The same thing is occurring here as well. In this case, I've counted a little bit differently because I just want to because I don't want to move the stops down here. It's possible to count it as 1 and 2 and 3 here and 4 here and 5 here. The other way to count this, of course, is, let me just borrow some from over here. Sorry about that. I'm going to just put these here and see what would happen then is that this one here can come to here and this one can come to here, the same as the DAX, but I don't think it's the same as the DAX here, so we've just got to be a little bit mindful here. I'll leave these two counts here, but my main point here is that if we do have 1, 2, 3, 4, 5 here, then it's possible for it to bounce off here and have a and a B and a C back to 5, 6, 5 and even higher here. So this stop loss here is going to be tested here in this particular instance here. So if you see this starting to progress here, then look to take some profit and leave some skin in the game, and we'll look back to getting into this. Now hopefully this will just follow the DAX and pull down a little, maybe a little bit more here, but not much though, because I can see 1 and 2 and 3 and 4 and 5 in here, and it may just come back to this block here. So this will be where the resistance is in here. That's where all the volume is traded there, so that's going to be the resistance there. Okay, so you could, if that resistance here and the market became support, chipped away at this supply here and became support here, then we'll definitely be moving up to that point there, because obviously that's the next supply. All of this through here is where most of the volume would be traded. If you looked at all the volume traded at a particular price here, then you would see it in this this price block in here. You'd see it at. So. But still in a bearish trend, whichever way you look at it. That's the good news. The FTSE is same as well. So the trend down is just simply unfinished. Okay, but there will be some carrying on here, because we'll be at 7,500, and the number 5 to me is the second strongest number in the market. So we're going to see some sort of consolidation here, and also too, even though we're expecting it to go down further, it's always good to look at where the ratios are. So grabbing the bottom down through here and the top up there as well, we can see that we're at the 62% mark at the current price. So we've got that plus the 500. So they kind of all work together a little bit. So it'd be an opportunity to short any rallies within here as well. If there were going to be, if there was going to be a rally, we can look at it at the wave 4 of 1 lesser degree and also the 38.2% retracement level. So we can put that on there. So it's possible for this to wiggle around here for a while and move back into this space before moving down here. And also once we get this 5th wave in, we'll also be looking at another 4th wave in here with this guy here. So this, it's, you know, it's going to be, the 500 could create a bit of a headache amongst all of that. So just be mindful of that. Look, we might get lucky and can just sort of slice through and move down there, but the probability is not the case, even though, because what you see is not what you get next. So if you're looking at a trend, then you're going to get a correction. If you're looking at a correction, then you're going to get a trend. So that's the way it works. You always get the opposite of what you're actually looking at. And it's a very simple point, but it's a tricky one to get your head around, because in the real world, you know, if you want to buy a car or a suit or something, then, you know, you look at it and you pay for it because you're getting what you pay for, you know. But in the markets, you're always getting the opposite of what you're looking at. Simple, but it took me a while to work that out. I'm not the smartest kid on the block, that's for sure. Alrighty, thanks for tuning in. Cheers.